So today I want to show a couple charts and breakdowns on what we see in the macro view of it over time when you have everyone getting exciting and everyone running in. When people from the outside look in on crypto or Bitcoin, especially in these upward trends, all they see is a rocket ship shooting to the moon and they're not on it. So they want to rush in, and it's that fear of missing out, that FOMO, that will drive people into the market towards the end. The higher it gets, even the people who I've talked to or maybe even watched these videos over time that just didn't really see, their entry point. I don't know. When Bitcoin breaks $100,000 this year, people are going to FOMO in. And at those points, that's when you tend to hit that euphoric stage when there are too many weak hands in Bitcoin and you'll get a blow off top, which just means a significant dip of either people taking profits that have been there for a while or people panicking because the price starts to dip when those people take profits. Now, when we look at the overall market cap, I'm going to share a screenshot with you. And remember, market cap is just the total amount of money in a certain asset or space. And with Bitcoin, we can see it's actually doing phenomenally right now, 52.1. I will take that every day. And, it's all smiles and we all feel good around this time because it's going up. It's going up. It's all just one giant green candle. Little do people remember, just 1 month ago in January, we hit $41,000 I think it was on the 11th of January, and we dipped all the way down to $28,000. So most of the people that rushed in and they were like, Bitcoin just broke 40,000, I got to buy some. They went straight into a massive blow off top. And then they're all texting me or texting whoever they know that is familiar with Bitcoin saying, oh my God, what's happening? Should I sell? I think I should definitely sell, right? Is it going to zero? All you're going to do if you just impulsively pull your money at that point is you're going to price yourself out because now it's at 52,000, and if you bought at 40, you sold at 28, and then it jumped back up to 52 and you weren't timing that dip at the bottom, you're just losing money. You can't really time it if you sell towards the bottom. And people don't always, sell at the top, like it drops $1,000 and people sell. It takes a little bit of twisting, a little bit of pain and suffering in those drops to get people to finally sell. So they sell significantly less at 20, 30% of a loss. And then that is when Bitcoin tends to consolidate and come back up. And to make this point, to bring everyone peace of mind, because this is all about peace of mind. I don't want anyone to come into Bitcoin and cryptocurrency in general thinking that it's one giant green candle into the stratosphere. You have to mentally prepare for the good and the bad and the dips. So this chart or graph is showing the bull run from 2017 into 2018. And it looks pretty much almost straight up, just a straight line up, no real drops, no real issues. And right around this point is when people started to talk, right? The people that were familiar with the space, that knew that the halvening just occurred. If you watched our previous video about what Bitcoin is, you knew that it was becoming more scarce again in its generation. So you have people starting to buy in, and everyone that's on the fence are like, I don't know. Jumps up to $20,000. Everyone is running out. There were stories in the news of people refinancing their house and pulling their 401k and maxing out or cashing out credit cards, all to jump in at $20,000 to lose it all in just a matter of a couple weeks, because it takes the stairs up and it takes the elevator down. It dropped very, very quickly. So people think, well, okay, but beforehand, everything was great. We were all making money. Sure, we were. But when you think about how it went up, this is the image I want you to burn into the back of your mind. So this is actually on Cointelegraph. I'm a fan of them. They're a Bitcoin news site. But this photo has been circulating around for a while. But this shows that parabolic run across 2017 and how many times we had 30 to high 20% dips. And at any point on that chart, people panicked. They said, well, we went from $600 all the way up to $5,000, and then we got a 38% dip. This is it, sell it all. And then the next thing you know, went straight back up. And then again and again and again and again. And right about here on the chart, like right around this 38 to 33%, somewhere right in there, that's where we're at now. And one of these dips, in theory, was what we experienced in January when we had that blow off top and it dropped all the way down to 28K and we consolidated for a while. I saw articles coming out of banking institutions that just the week before were saying Bitcoin was going to $600,000. And now they're putting out articles saying, oh, well, we don't know if it will ever get over $40,000 again. That is the bipolar dichotomy of these organizations that they think that, oh, it's going up forever, or it's a scam and it will never go up at all. Like there is no middle ground. But in having this understanding, you'll be able to mentally prepare for when there is a blow off top. We'll be able to just tighten the hands up. You don't want your diamond hands cracking. Tighten them up and understand, ride it out, and we will continue on that uptrend. Now, eventually, probably towards anywhere between September and the end of the year, we will hit that top point where we will have this big correction, this big blow off top at the end of this bull run. But there are several indicators and factors and metrics that people way more intelligent than me have put in place to be able to predict when those times are coming. So I'll try and consolidate that information for you and give it to you so that we can all be prepared and take profit and protect that total value and not lose it on the way back down. Now, remember, I am not a financial advisor. So I want you to take this with a grain of salt, but I do believe it is good advice. It's what I wish someone would have told me when I was starting, because trust me, do as I say, not as I do. 2017 was a learning curve. But these mistakes aren't necessarily like terrible mistakes. It's things that people do in this psychological crunch of I need to get in or I need to get out. If you have, I'm going to use an example, $1,000 and you want to put it into crypto and Bitcoin, do not take it all and throw it all in at one time. Because what you're going to wind up doing is, like right now, if you see on the charts, oh, Bitcoin is at $32 or $52,000 and it's just going to go up to $500 million and I'm never going to catch it. You're going to put everything in. Bitcoin, having just done a 15K run up from 38K to $52,000, is primed for a correction or a blow off top. You're going to put everything you have in at 52, and then it's going to drop to like $30,000. Now, this may happen at 60 down to 38. It may happen from 100 down to 50. These corrections are going to occur, and if you put everything in at the very top at that moment, you may catch that correction, because that's when, if you're finally pulling the trigger and investing, most people that have been on the fence are going to pull the trigger right around that same time, because it's usually right after Bitcoin runs up $10,000, $15,000 that everyone is like, yeah, now it's only going up, so I'm going to toss my money in. So keep those things in mind when you're investing in dollar cost average. And what I mean by dollar cost average is you take that $1,000 and you set yourself up on a schedule. So let's say you can look at the total week or month, however you want to schedule, and say every day or every week I'm going to put $100 in. And if it goes up to 55,000, good. Next schedule, I'm putting $100 in. It went up a little bit more. You kind of want to throw everything in because it keeps going up. But you put in $100, you stick to your schedule. And then blow off top. And it drops by $10,000, $15,000, and you still have 700 left to then put that money in. It's a better way to average it, to not catch yourself at the top, to have that correction mess with you psychologically, because it is tough, even for someone like me who I understand that these things occur and that they will continue to occur. I stayed up a fair amount of time on the nights in January and stared at the ceiling and rationalized with myself, maybe I could just pull it and put it into a different altcoin. Maybe I could find a different way to have that money do something during the dip. I didn't do it, but the fact that I'm having those thoughts, I know for a fact that a lot of people pulled their money or tried to switch it to something else, and they lost their leverage in being able to invest in this space. And that is not what I want to occur for you. So I wanted to make this video before I put out our one on Coinbase, which is pretty much the main exchange that people in the United States use, and that I'm going to recommend because of ease of use. So we'll do a video on Coinbase and how it operates and what's available. But before I did that, I didn't want to give everyone the video on how to invest without first trying to take a little bit of responsibility in explaining that there will be corrections and there will be downtimes. And it is okay to stress, but I don't want you to price yourself out. This opportunity is too important for everyone involved. And I hope that this information will help give you peace of mind when there is a downturn, or when there is, some fear out in the news, or you hear someone say, oh, it dropped 10K, it's going to zero, it's fraudulent. And also hear some fake article from some anonymous person online saying that Bitcoin is a scam. Keep these things in mind, and it's going to make it a lot easier for you so that you can enjoy the ride instead of be petrified by it. Aside from that, thanks for joining us on Viva La Coin, and I'm looking forward to catching you on the next one.